Welcome to Dental Business RX. Practice success in 30 minutes or less.
Thank you for calling ABC Dental.
Hey folks, it's Jeff. Before I kick off this week's episode, I wanted to mention we're doing our 250th episode in 12 weeks, 12 episodes. So it's going to be a listener Q&A episode. I've been cultivating questions over the last few months. If you have any specific questions you'd like to see answered, I'm going to pick the top 7 or 8. You can email them to me at jeffb@mgeonline.com or go to the Contact Us page on Dental Business RX and fill out the form there. Look forward to hearing from you. And with that, let's get into the episode. Do you have clear-cut, specific, short, and long-term financial goals for your practice? How about for yourself? Well, if you answered no, you're not alone. This past week, I delivered our Financial Planning and Profitability Seminar. It's part of the MGE Power Program. I'll put a link to that if you want to find out more. And normally, this is a seminar. It's the first executive seminar that clients do on the Power Program. Anyway, as I was preparing, something struck me. When I work one-on-one with a client to sort out their financial scene, whether it's, maximizing profit, reducing overhead, whatever, one of the first things I address are financial goals. Do they have them? And if so, what are they? Are they reaching them? And most importantly, if they're not reaching them, what changes or actions need to happen to make this a reality? Well, having delivered this financial seminar 3 times a year for close to 28 years, I realized that I'd never asked that of the attendees in the room. I'd do it one-on-one, but never ask the group. I'd lay out the system, but, if you have a system with no goals, it's a tough system to enforce or keep in. It's sort of like exercise. If you're a gym rat, why do you exercise? Sure, your goals may be different than others, and you may not be hitting them in any way you like, but you have goals. Imagine exercising with 0 goal. You have no reason to exercise. Why do it then? Why put yourself through the pain or the hassle? So anyway, starting this lecture off, get through the overview, and I asked this room of 45, 50 doctors and another 45 on the live stream, how many of you have specific financial goals that you're working toward? How many hands went up? 2. 2 hands. So I was a bit shocked, but I picked up on it, and I invited the attendees to make some by providing a rough framework on how to go about it. And I thought, I wonder how endemic this lack of goals, with finance specifically, really is. And boy, I was pretty surprised when I started to ask around. It's pretty common. So for this week's episode, we're going to take a look at this subject. We're going to take a look at financial goals, specifically how to formulate them for both your practice and for yourself. And most importantly, how to make an honest assessment as to what it's going to take to make these goals a reality, like actually make them happen. My name is Jeff Bloomberg, and I'm your host. And I'm just going to jump right into this. I have a lot to cover. And I'll just give you a little bit of a heads up. For some of this stuff, you're going to need nothing more than your imagination, all right, because you're setting goals. For other parts that I'm going to be running through, you'll need some financial data. I'm going to run it as a list, and you can follow along. And if you're driving, exercising, or whatever, it might be tough to do it in real time. But I'd recommend going through the episodes so you get a general idea of how you do this. And then you can kind of, put pen to paper later if you need your financial stuff in front of you. So we're going to start with figuring out where you are, and then we're going to get into where you want to be. So we'll start with step 1, which is your practice. So what are you going to do with the practice? This is sort of the part of where am I step. First thing you need to do is establish your actual overhead. Now, for some people, this is tough, and I understand. And obviously, operating without an overhead is dangerous, right? If you don't know what your overhead is. A couple recommendations I would make. Number 1, I'll put as a download on the episode webpage our overhead spreadsheet. It's super thorough, and you can kind of walk through it, and it figures out what it actually costs you to keep your practice open every month. And it covers expenses that you might not have otherwise thought of. If you want more one-on-one guidance with this, you can come to the seminar in the Power Program, or what you can do on DDS Success, which I'll put a link to as well. We have a series of, it's actually supposed to be 4 courses. The 4th one is in final edits right now. We have 3 courses up, the first of which is called How to Determine Your Overhead, right, or Accurately Determine Your Overhead. I'll put a link to that on the episode webpage. But that's the first thing you need to do is, what is your actual overhead? So then we got to figure out what your general profitability is, your income versus overhead. What's the profit formula? How much do you make versus, how much do you spend? So you'll need a couple things. You'll need your P&L and your general collections every month, let's say refunds for the past 4 months for an average. right? So you can get an idea of what the profitability is. Now, one thing to keep in mind, if you're a solo practitioner and you're giving yourself a paycheck of, let's say, $20,000 a month, and including your paycheck, because that'll be baked into salaries most likely, at the bottom, it'll show a profit figure. Let's say the profit is $20,000 a month. Well, then you're getting a salary of 20 and there's still a profit of 20. So technically that profit also belongs to you. So I'd factor both of those things in because we're taking a look at like, what are you making out of this practice? If you had an associate driven practice, which you never spent any time in, or you were looking at backing away and having other people do the work, well, then that profit figure becomes a lot more important because you're already paying yourself as a doctor. Anyway, so we've got our overhead. We've got a general idea of how profitable our business is and what percentage that is. The next thing I want to take a look at, this is all part of figuring out where we're at, is I'll need a practice debt schedule. Hopefully you haven't fallen asleep once I mentioned debt schedule. Look, I know they're not fun to look at, okay, but these are part of determining where you are. This is, I assume if you have a lot of debt, one of the goals is to get rid of that debt. Now, for this, we're going to look at debt specifically related to the practice. Your practice loan, maybe a loan or a lease you put out on chairs, any other lines of credit you have for the practice, etc. Okay? You may be guaranteeing these personally, but generally these debts, especially if these debts are normally paid by the practice, this is what we want on our debt schedule. Now, I was going to do a whole spreadsheet for this, but this is super easy, so I'm just going to give you the basics on this. So what do I want on my debt schedule? I would recommend using a spreadsheet because then you can kind of total things up a little bit easier. All right, column 1, or A, would be the name of the creditor. This could be B of A Practice Solutions, Chase, whoever it is, right? Column B would be the monthly payment. Column C would be the interest rate you're at. Column D would be how much you currently owe, like what's left until this is paid off. Column E, the fifth column, would be the maturity date. In other words, if this is an installment loan, when is this loan done being paid for? February of 2030 or whatever it is. Now, a couple of things I'm going to add here. So that would pretty much cover all of your debts. There's two specialized forms of debt that I want you to there's a couple things I want you to keep in mind. For lines of credit, generally speaking, it depends on the line of credit, what bank you got it from or whatever, but lines of credit follow a couple of basic rules. Your monthly payment may just be interest to service the line of credit, or your monthly payment may be interest plus a little bit of principal. It depends on the bank that you're dealing with, all right? But lines of credits also come, is it lines of credits? Lines of credit? Line of credits? Whatever. LOCs normally come with a maturity date. Now, this could have a couple of different ways it manifests. 5 years from now, this line of credit will turn into an installment loan based upon, you can't use it as a line of credit anymore, and whatever's left on the line, you're going to have to pay off as a loan at X interest, right? Or it may have a maturity date where you then have to go to the bank and prove that you're still worthy of maintaining a line of credit, and then they'll roll it over and give it to you again. Now, this can get dangerous in the sense of, let's say I owe $100,000 on a line of credit, and its maturity date is 3 years from now. That's the date that this line of credit has to be renewed. It's one of those. I owe 100, 3 years from today is when I'm supposed to renew it. I'm only paying interest. Let's say that's how this one is set up. What that means, unless I start making a dent in this debt, I'm going to still have $100,000 on this line of credit 3 years from now. There's a chance 3 years from now that I could go into this bank and this bank got into trouble, or I got into trouble or whatever financially. I go to this bank to renew this line of credit and they go, yeah, I'm sorry, we don't want to renew it, Jeff. So please pay us back in 30 days. Then you're freaking out. So what I do with lines of credit is, let's say I find out that my line of credit gets rolled over, maturity date, whatever term you want to use, is 5 years from now, and I owe $100,000 and it's at 7% interest. The way I'm going to work that out is figure out what would I have to pay every month to have that fully paid off by the date that I have to renew it, the maturity date, whatever we're going to call that. And that's what I would add to my overhead. That's what I'd want to be paying every month. Because then when it comes time to do it, it's at zero, which means you'll probably get approved to do it again because you don't need it. Anyway, next thing is credit cards. Now, credit cards could fall into two buckets. First bucket would be a credit card that you're using just for, buying things for the practice. You use a credit card for your lab or your supply bill, and at the end of every month, you just pay it off. Well, on your overhead sheet, those would just go under those categories, lab, supply. Because the credit card is just the means by which you're paying those bills instead of doing a draw on your checking account or writing a check, right? Or doing a Venmo or whatever, right? If you're carrying debt on your credit cards for any reason that you don't pay off at the end of every month, well, then that should go on your debt schedule. Now, the way I want you to list this on your debt schedule, because remember, when we're working this out, we're figuring out what does it cost to keep the lights on, okay, is we're just going to list out the minimum payments on these cards. This is if we're carrying debt, not if we're paying off labs and supplies at the end of every month. I hope you get the difference there, okay? Now, you might go, Jeff, that's insane. Why would I list a minimum payment in that section? What is it? Column B, monthly payment, right? Well, the reason is we're going to knock out those debts with profit at some point. But for now, I at least have to service my debt, and my monthly minimum payment will keep my credit card from becoming a problem to where my credit is going to get, destroyed by not paying it, all right? So I'm going to do my full debt schedule. So by the end of this step, I have my overhead, I have a general idea of my profitability, and I have an idea of how much money I owe related to the practice. Now, we're going to move on to the next step, step 2. We're going to go back to the practice later. But for step 2, we're going to look at ourselves, or yourself, right? And we need to put together a few things. So what are these things we need to put together? Well, first thing we need is our current living expenses. What does it cost to live every month? Now, I'm going to add an adjective here, comfortably. We're not eating ramen like when we're back in school, okay? What does it cost? Instant ramen. I have fond memories of that. Anyway, but what does it cost for us to live comfortably at home? Pay for the kids' school, fund various things that we're trying to fund, make all of our payments and have a little bit of money left over. What does it cost for us to live comfortably? That's the first number we need. Then the second thing we're going to do for home is another debt schedule, but we're going to do it for personal debt. Same thing, student loans. You could put the mortgage in there, although the mortgage is probably something that you're going to pay off last. People have asked me, do you want to put auto loans? I'm kind of torn on this, just because, and this is just a personal thing, I'll tell you, I've always carried auto debt because that is a depreciating asset. A home, on the other hand, is always an appreciating asset. But an auto, the second I drive it off the lot, is going to be depreciating. And cars are made to specifically, this isn't conspiracy theory, this is more just observation. They're made not to last anymore. So I'm going to probably be cycling my car every 4 or 5 years unless I have a car from the 1960s, right? So I don't really worry about that so much. You could put it on your debt schedule just so you have an idea, but this isn't the debt that I'm going to go after like a nuclear missile. I'm going to be focused more on student debt or credit card debt and things like this, lines of credit, etc. But I'm going to do the same thing I just did with the practice. I'm going to do a personal debt schedule for stuff that I'm servicing personally. All right, so now if I've done that and I know how much I need to live at home, what my debt schedule is, and I know how much my practice is making, what my debt schedule is, and how profitable I am, I'm now going to examine a few things. First thing I'm going to take a look at now that I have all this data is, am I making more than I am spending in the office and at home? So if I'm collecting $100,000 a month and only spending $80,000, yes, I'm making more than I'm spending. At home, is my income higher than what I am spending? These are the first things I'm going to look at. Am I doing well? Am I just getting by? Am I making enough profit to put a dent in my debt at the practice and at home? Gives me just a general idea of where I am, right? This is the starting point, what the existing condition is. Which brings me to the next step, step 3, where we're going to use our imaginations, all right? Now, of course, goals are as different as people. Everybody has different goals, so, depends on the person setting them. So this is personal goals. This is step 3. So the first thing I'm going to look at is how much longer do I want to practice until I am financially independent, okay? Now, you'll notice I didn't use the word have to practice. I used the word want to practice. I said want because I'm counting on this want or drive to push you along as you work towards your goals. So let's say you're 42 years old and you go, by the time I'm 55, I want to be financially independent. That's when I want to be able to cut back, or I want to be able to work, not because I have to, out of economic necessity, but I want to. And that's just, it doesn't matter what the situation, and look, you could sit here and say, well, there's no way I could do that. Oh, that would never happen. One of the benefits of experience is I've seen stuff that at first blush you would think couldn't happen. So I want you to first make a goal here. You're however old you are now, and this is the age you want to be working till for when you're financially independent. Doesn't mean you're going to retire and go play golf. Just means that you're working because you love work, not because you have to work. All right? That's the first thing we need. Next part here. So I've set this goal at 55, 60, whatever age it is that I'm going to be financially independent. Now I want to flesh out. This is kind of step or part B. What would this look like? Meaning, personally, would I have a house? What kind of vacations? Et cetera. Like, what would my life look like when this occurs? And not just would it look like, what do I want it to look like when this occurs? At 55, 60, whatever age you picked, okay? And then I'm also going to have to look at, okay, so I've gone, okay, this is when I want to cut back or I want to work. What's the term we can use that I can use interchangeably? To when I'm financially independent. Here's when I'm financially independent and I'm working out of desire, not necessity. And this is what my life would look like. Then I have to confront, how am I going to fund this lifestyle? What would I have to do in order to be financially independent? What would I have to have? Am I going to have a bunch of money invested in the markets? Am I going to have real estate? Whatever. How much is this? 5 million, 10 million, whatever that is, okay? To maintain the lifestyle that I've kind of envisioned for myself by the time I've decided to be financially independent. Now, you may have trouble fleshing this out perfectly, right? Oh, I'll have $5.2 million and it'll be earning this much or whatever. That's where financial planners help if you can kind of lay that out. Look, this is where I want to be. This is the lifestyle I'm going to need and this is how much I have to make, right? And they can kind of build some architecture around that to tell you how much money that would take. But essentially, you want to do this for yourself, so you're kind of setting a goal out into the future of, I'm going to be 55, this is what I'm going to have, and this is how my life is going to go. All right? It's great if you have a number, because then you go, I have to have $10 million accumulated, or $5 million, whatever that number is, okay? The next step is we've looked at your debt already personally, but depending on where you're at in life or career, you may have some other large expenses somewhere on the horizon. Let's say you're younger and you've got younger kids, right? And you've made that number. I'm going to be 55, I'm financially independent, and I have this boatload of money or these investments or whatever it is, which is going to be 5 million, 8 million, whatever it is. Well, you still got a couple colleges to pay for. You need to get more house because you're planning on having another kid, etc. Any big expenses that you see coming over the next 5, 10, 15 years, I would factor that in as well, because that's going to affect your ability to accumulate this, number that you want to be at for when you're financially independent, okay? And you can kind of figure out when you're going to need that. Well, in a couple of years, we're going to have to buy a new house, so you figure we'll be spending a little bit more money, blah, blah, blah. So to sum up where we are, we figured out when I want to be financially independent, what it would look like, how much I would need, a general idea of big expenses over the horizon between now and when I'm going to be financially independent. But we have one last thing to do here, actually a couple last things. Next thing is we're going to look at one other actual, all right, which is, are we currently working toward all of this now? So you've just set your life up. This is what my life is going to look at at 55 or 60, and I'm going to pay for my kid's school and all this kind of jazz, right? Am I working towards this right now? And that could be a number of different vehicles, various types of investments. And look, let's just be clear. I'm not a tax attorney. I'm not a financial professional. I'm not an accountant. I'm not a broker. I'm not a financial planner. Okay, so obviously defer to those folks for the stuff that you need. I'm not giving you that kind of advice. But I want to look at, so however you're investing or saving, whether it's, IRAs, Roth IRAs, annuities, whole life policies, whatever it is. But based on what I'm putting aside for that future date, okay, as well as to handle these additional expenses, am I going to hit my financial independence goals? Let me give you an example of this. So I was sitting down with a client years ago, and he was probably in his 50s. I think he was in his early 50s. He wanted to work until he was, I think it was like 62 or 63. That was sort of his date when he wanted to be able to work just out of, for fun. And he explained to me what his life would look like at 62 or 63, whatever age he picked. And we took a look at what he was putting away and how it was performing and how much he was currently earning And based on his current earnings and what he was putting away, he would only be about 25% there on his financial goals he needed to hit for when he turned 62 or 3. I'll say that again. So let's say I needed to save $5 million by X date. That would be like being only at $1 million by X date. So he had this goal, he had this vision, but what was currently happening in the real physical universe, okay, he'd have some money when this all happened, but he would never hit the target. So what did we do? We had to build his practice, right, so that he could actually hit this target. But the point being is this is a tough one, because here's where you really have to be honest with yourself. Okay, so you really have to be honest with yourself. If at the current clip you're going at, you're not going to be at the goal you've set for yourself unless drastic things happen, right? This is where you want to look at, well, how much more would I need to be setting aside in order to be at that point? Maybe it's an extra 10,000, 20,000, whatever. Most people gloss over this and they kind of hope, oh yeah, sure, things will work out until they're 62 or 55 and they go, yeah, I didn't make it. So I'm trying to get you to not do that. I want you to confront it now, because the one thing you can never recover is time. You can always make more money. You can always buy another whatever, car, practice, whatever. You can't get your time back. And your time works against you the longer that you procrastinate. So if I find out now that my goal 20 years from now is not going to be hit because I'm not making enough money, that's a lot easier to change course. It's like the Titanic seeing the iceberg when they're 5 miles away as opposed to when they were right on it, okay? So this is where you have to be honest with yourself and come up with a number. Oh, I need to make X amount more per month, all right? And obviously, if you're not going to hit it, this is where you have work to do. And as a practice owner, what's the easiest route? Well, you own a practice, and I'd bet money that if you found you needed to make an additional $20,000 a month in profit to hit your goals, your practice could be organized to make this happen. And this is the tough one, folks. This is one that this is a tough one. People gloss over this. Now, let's say you're an associate doctor listening to this. You go, well, I don't have a practice. I mean, you could look at, as an associate, how could you make this work to where you could make X amount and get rid of your student debt or whatever. Generally, a practice owner on average is going to make more than an associate doctor. That's just generally how it works, unless that associate is really, really specialized. And I've mentioned numerous times on the show, if you're an associate doctor, practice ownership right now, this is a buyer's market right now. There's going to be a lot more practices for sale than there are buyers. So maybe this is a time to start thinking about picking up that practice you've been wondering whether you should buy or not. If you have questions on this type of stuff, because that can get very overwhelming, reach out to us, contact us. You can email me at jeffb@mgeonline.com, or you can call us at 800-640-1140. We'd be happy to help. All right. So let's say we've done this. We figured all this out, personal goals, where we need to be. We took a look at how much we're putting away, and we're not putting away enough, in which case we have some work to do. Or, we could be putting away enough. We might be putting away enough. We're right on target, in which case, well done. That you're rare, but so super well done, right? But for most, they're not setting themselves up to where they're going to actually hit what they wanted to hit by the time they want to be financially independent. All right, which brings us to step 4. We're now back on the practice. All right, so we're looking back at the practice. Now, as the practice owner, the first thing I'd invite you to do is take a look at what goals do you have for this business. We often don't do this. You start it, you kind of have a basic vision of what you're trying to create, and then you get to work and you're the doctor chair side and you're just going and trying to make it go. Now I want you to take a step back from that. Look at what kind of goals do you have for this business? What would it look like in its ideal state? Clinically, office-wise, team-wise, busyness, revenue, etc. If you walked away, right, and came back 5 years from now and everybody did what you asked them to do and it was exactly what it should look like, what would that look like? If I took a video of it, what would it look like? So we're kind of envisioning that. Now, the next thing to do is you've already figured out at home, well, how much do I need to make more money, etc., whatever you figured out. So now I would then have to compare, if I hit these practice goals that I've envisioned for myself, would I be able to pull all the personal goals I've laid out? Right, so you get the idea. So if I hit the practice goals, I'm going to make an extra X amount per month, so therefore I'm going to easily hit the goals that I have set for home. Great. If what I have envisioned for the practice wouldn't satisfy my home goals, well, then I'm going to have to adjust my practice goals. I'm going to have to do a realistic assessment unless I have another means of income. So I'm going to have to adjust my goals at home or in the office so that they agree. I don't want to just settle. I want to make sure I'm hitting my goals. Now, if I've taken a look at my practice in its ideal state, would be able to meet my goals at home, the next thing I want to take a look at, and again, I keep saying take a look, I'm sorry, but that's what we're doing. The next thing I want to confront is, am I on track to making these practice goals? Because if I make the practice goals, I make my home goals, right? But am I on track to making it? Let's say long term in my ideal state, my practice is doing 150 and I'm doing 80. Am I on track to get to 150, in an adequate or in the proper amount of time? I can't do it in 20 years from now, but am I on track to do this? Now, if I'm not on track to do this, let's say I need to be at 150 and that's my goal, but I'm only at 80, and if I was at 150, I'd be meeting all my home obligations, but I'm stuck at 80 and I've been stuck at 80 for 6 months. Well, this needs to be sorted out, and this is where I could do 30 episodes on what you would do to sort this out, because it could be any numbers of reasons. It could be case acceptance. It could be that you have a lot of plans in your practice. You may need to sort out your team. You may not be getting enough new patients, etc. Right? But the idea is I need to sort these things out if I want to hit my practice goals, which thereby allow me to hit my personal goals. And again, the one thing I can't get back is time, so I don't want to delay. Now, if I am on track, and it would allow me to meet my personal goals, again, I'm fine, right? But in most cases, what I find is people are not. In my ideal state, my practice would be handling me at home, but I'm not on track to actually meet those goals. And the longer I wait, the longer I spend not reaching them. If you find that you're in that situation, you're the person who needs to do 150, you're doing 80, I know I just threw that out there as an example, to reach your goals, and you're not on track, you're not moving towards that goal, here's what I'd suggest that you do, because it could be any number of reasons why you're not. We do offer a free practice consultation or assessment where we take a look at, here are the main trouble spots or bottlenecks in your practice, why you're not growing, etc. I'll put a link to it on the episode webpage. But I wouldn't really wait to do something like that, just because the longer I wait, the longer I'm not reaching my goals. Anyway, a bit more of a complex episode. I apologize if it was a lot of, goals, this, financial, this or that. But I find people just don't have these, and they do take a little bit of work to do. But it's very fulfilling and very worthwhile if you have them, because then at least you have a reason to do all the stuff that you're doing and organize, etc., in order to attain those things. And it benefits not only you, it benefits your team, your patients, your family, and your fulfillment overall. And again, I know it's a bit of an exercise for a podcast, but I wanted to throw it out there. And if I at least got you looking and thinking about this, I'll take a win on that one. Because again, not having goals or clearly laying them out makes everything else not work. It's like a vacation with no destination. And believe it or not, I could have gotten a lot more complex about all this, but I like to keep it simple. Of course, you could drill down and set up short-term, like I want to get out of debt, or long-term goals, 1 year, 2 year, 5 years. But I definitely want you to think with the big picture, because then you have something that you're pushing toward. And more important than any of that, of course, is having some direction. And I do hope that this helped. And don't forget, I have those links I mentioned for the overhead sheet, the power program, and the free consultation on the episode webpage. Folks, if you want to know more about MGE, you can find us online at mgeonline.com or call us at 800-640-1140. Have a great week, and we'll see you at the next episode.